25. You've got the mid-cap index, which is up 0.6%, and the small-cap index, which is, I think, up about 0.5% plus as well. And like we've had for a few days now, market breadth right out of the gate, super strong this morning. And the BSE advanced decline is up on the NSE as well. So 5:1 in favor of advances on the BSE and much stronger on the NSE as well. But just sort of these are opening rates. We'll have to give it some time. The Nifty heat map will come up on your screen, gives you a quick snapshot view of how things are starting. So it's, I think, a replica of what we saw yesterday. Majority of the names are higher and about 10-11 names are starting the day lower at this point. I think the Ultratech is, I can see on the gainers board, as Nigel was pointing out, that upgrade coming in on cement from UBS. Surabhi.
Absolutely. So it's looking good, 100 points higher on the Nifty and far more green than red today. Apart from Ultratech, Ultratech is, of course, the biggest Nifty winner at this point in time, 2.5% higher. IT is off to a good start. HCL Tech, Infosys, TCS, all these stocks are up and about. Banks are chugging along quite nicely. HDFC Bank about 0.6%, higher. There's some green on Axis Bank as well. Kotak Mahindra Bank also on the positive side. So banks and IT look fairly stable. L&T is notching up a gain of about 1% or so. Some of the auto stocks are seeing a little bit of buying as well. Hero Moto, Tata Motors, Maruti, M&M. So not too much, but just about 0.5% on all of these stocks. So not too bad. On the flip side, Dr. Reddy's is lower by about 1.5%. Britannia, there's some labor issue. There's a strike at one of their plants, I think, in Gujarat. Stocks down about 0.5%. Innocent Bank is seeing some more pressure after yesterday's 1.5% fall, another 0.5% today. And some of the steel counters are a little careful this morning. Tata Steel, JSW Steel, Hindalco, all the steel majors are down about 0.5%. Reliance, Lever, these are the fence-sitters, the big boys, not doing too much. But at least many of the banks and IT, on the positive side, looking good.
Well, that's right. EIL and RVNL, both those two, they have one order. So that's why both those two stocks have opened up in the green. Suzlon, there's an initiating coverage that's come in from Motilal Oswal. They have a big target price out there, and that explains why that one as well is doing well. It's up close to around 2% or thereabouts. Colgate, I've seen a report coming in from Investec, and they are talking about earnings deceleration likely to continue on Colgate. So that explains why that stock, in fact, is down close to around 3%. Could be weighing on the stock. Colgate, one of the big losers this morning. On the flip side, what's doing well? Ramco Cement's up. Ambuja Cement's up. Both those two participating as well. Ultratech obviously is the big gainer. Polycab, we had highlighted earlier today that one's come out of the F&O ban. That stock is up close to around 2.5% or thereabouts. A good move is what we're seeing on that particular name. Ola Electric, well, they have settled the dues with Rosmota Group. So on the back of that, you have that stock as well that's doing quite well. IRIDA, the stock continues to see its good run. Remember, it saw a sharp correction from the peak. Now, in fact, that's bounced back. And ITC Hotels as well. That one's gradually hovering around the 200 rupee odd mark. The sector of the day, though, to start off with, is the cement space. All the stocks doing quite well. Relative underperformance is what we're seeing. Dalmia, Ultratech, Ambuja, all of them firing all cylinders.
All right, absolutely. It's a solid start for that particular pack, as we've been sort of highlighting and pointing out. The number one volume-led gainer right now is Garden Reach Shipbuilders, GRSE, which is up 3%, 1754 on Garden Reach. And I mean, that defense pack is done phenomenally well in terms of just bounces. Garden Reach is one. I mean, look at names like even smaller names, private companies, Zentech, for example, Cochin Shipyard. HAL has come up very sharply as well. I think HAL is up about 25% from the lows. It's done less as compared to some of the others in that. BDL is another one. So, yeah, I mean, massive moves, very short time span, like Spring Coil, right? I mean, Zentech, I think, is up another 5%. 1,600 is back on the rate on Zentech. The high, I think, was close to about 2,600. So, yeah, I mean, a fair bit going on. What else? I mean, maybe this IGIL, I think it was up 5 yesterday in the morning as well, I remember. That's the diamond certification company. So it's coming up almost back at 400. Brigade is up 3.5%, 1,027. These are, by the way, I'm just sort of reading out based on the largest volume-led gains. Info Edge Naukri is up 3% with gains. E2E Networks, 5% gain, 2414 on E2E coming through. Medanta, the hospital company, 3.5%. Carborundum Universal is up 7%, 1,085 there. Chola Holdings is up about 3% or so. And then volumes drop off a cliff. Nothing really. If you go down the list and look at more gainers, I mean, this is the bulk of where we are in terms of volume-led gains coming through. On the downside, JBM Auto had an outsized move yesterday. It's down about 1.5% and large volumes. Colgate is down 3%, is the number one volume-led loser at this stage. Dr. Reddy's is down 2%. Viatec Vabag is down 3.5%. And the two refiners we were talking about with Prabal, Chennai Petro and MRPL, both are starting the day down about 2.5–3% lower. So, again, large volumes and some gains being taken off here. Ajay?
Just one more stock I wanted to point out. SG Finserv, noted investor Mr. Madhu Kela, went ahead yesterday and bought close to around 10 lakh shares. That one should come up for you on the screen. SG Finserv is now up close to around 15%. Big volumes out there for the initial part of trade. And yesterday, I think to be precise, 9.5 lakh shares or 1.7% stake was picked up by Mr. Madhu Kela. Explains why the stock is flying away. And just one more point. Earlier this morning we said that if the market needs to hold on to this rally that we have seen, and if we need to see a bit of an up move, we need the tech index to participate. And the tech index in this year itself has been a relative underperformer. This morning, it's a big outperformer. It's up 1.4%, and gradually it's approaching that 20 DMA, which is an important, crucial level. So tech is the one that's outperforming this morning, taking over the mantle from the Nifty Bank.
Yeah, no, absolutely. I mean, within the sectoral bounces we saw, the data that we put out, IT has done the worst. So yeah, I mean, there is there is room. Definitely, there is room. I think it remains about 20% off the all-time highs. On the Nifty IT space. Well, we'll talk more about this. Krishna Sangvi is with us, Chief Investment Officer, Equities at Mahindra Manulife Investment Management. Krishna, good morning. Great to have you with us here. Prashant here. I mean, by the way, the market's coming off a little bit. So just about 40 points left now after the massive move we've had from the lows. The question, though, Krishna, is even after, whatever, 4,500 point rally on the Bank Nifty, 2,000 point rally on the Nifty from the lows, I don't think it's wrong to ask whether we're completely out of the woods. How would you answer that question, Krishna?
Yeah, hi, Prashant. Actually, markets have taught us that it's clearly impossible to, categorically say we are out of the woods or not. But let's look at the factors, right? So what we've seen in last 6 months, is a multitude of factors. If you look at pure fundamentals, we had a little bit concern on earnings, on economy not, growing as expected a year earlier. The kind of data points we got for Q2 and Q3 was honestly a bit weaker than what we really want as economy. You look at a little bit on the flow side and sentiment side, post election in US, the expectations rose about how US economy can do well, US corporate earnings can pick up because of tax savings, etc. So that's the reason, why across the EMs we saw money moving out and possibly heading to US as a preferred option for some time. And third really was, a little bit pure India-specific liquidity angle, which you call it, about how, new rules of, derivatives, etc. were being played out, or margin trading, etc. So if you look at combination of all three, we saw markets, behave the way they did. Come to, let's say, March this month, I think, the worry started in US actually on the reverse side, saying that if they really implement Dodge and if they really implement tariffs the way they plan to, some sort of a worry on US corporate earning growth stroke economy. So that reversal of EM money into DM possibly is what could have reversed is one. And from a economy side, the budget was pretty interesting. We got this this consumer surplus kind of thing and government's action. On top of it, RBI did its own, support by way of rate cut, as well as, really indicating their willingness to, do that extra to really support the growth. I think that factor has changed. The only thing missing in this, really is the pace of change, which is quite fast in a sense. If you just look at last 7 days, we would have rallied nearly 2,000 points. That typically comes more in a rebound or a oversold kind of market. So let's see how it plays out. I think data-wise, quite a bit of oversold or short position would have been reduced by now. Let's wait for Q4 season and then judge based on what the management commentary comes out of economy in 26 for their own companies, as well as little bit support from global markets is required. Last thing, maybe let's not forget, April 2nd is still a relevant date. So that's what we likely to see some formal announcement from US on the tariff, etc., and how India as a country, stroke a lot of other countries, can get impacted. Can be another, things to monitor and then possibly take a call later on.
Krishna, hi, morning. Good to have you on the show. So financials have, become the face of this move that we've seen, right? The recovery from the early March lows. What is the weightage that you're willing to give financials in your portfolios and within the basket, because it's a very wide basket? What is your preference between banks, NBFCs, private sector PSU, obviously insurance, capital marketplace? There's a lot going on there. So just give us the details.
Yeah, sure. So I think if you look at broad positioning financials, clearly it is more domestic economy driven, so would likely to go overweight for now. Basket is huge, whether you call it private banks or public sector banks or lenders. So broad thought really is they'll have relative preferences, partly coming from the kind of mandates we run in each of our funds. As quite a bit of large cap has more of banks and NBFCs. While capital marketplace, etc., are more into mid and small cap kind of schemes. So broadly, as a house, some of our schemes will be overweight more in capital marketplace, somebody more into NBFCs or financials. So I think combination is what possibly makes sense to be overweight for now.
Hi, Krishna. The problem is that Q4 earnings are not going to be great. The hope is that after that, we'll see that, that earnings will be good. We'll have a low base as well, which will play out. Do you think the markets are prepared to look through a weakish to a muted earnings in Q4 and just be happy with the positive commentary that we're likely to hear? Your take?
Yeah, again, it's difficult to pre-guess, whether markets are ready for all the bad results or weak results. I think some of the companies which have corrected sharply in last, 2-3 months, possibly, those Q3, so those Q4 outcomes is, perhaps captured is my guess. Somewhere, the intensity of the numbers stroke the commentary for FY26 possibly will be a far bigger play. Come to think of it, yes, clearly in the month of March, where we are now, and by May the results are out, more or less markets will be more in a mood to see what they have to say, and report about FY26 outlook rather than so much about Q4. So it will be a mixed bag, I guess. For some companies, if the intensity is pretty poor in terms of numbers of Q4, it might be worry, but otherwise broadly it looks good. Especially for large cap, it looks far better.
Okay, all right, Krishna, let's talk about the two top sectors of the day in the first few minutes. One is tech, where we have seen that index being an underperformer. That's actually outperforming this morning. It's up closer to 1.5%, while the markets are more or less flattish. As well as cement, which is the inward-facing sector, right? Irrespective of what's going to happen on tariffs, the cement demand is more domestic in nature. How do you approach both these two sectors, and what's your current stance?
I think cement is clearly demand is reasonably good. If you're betting on India capex cycle, demand-wise, cement is a pure play commodity which is required, can't be imported. So a domestic play, as you suggested. So clearly positive, overweight call on cement is something I'll say. IT, it's been an underperformer for last, let's say, 2-3 months. In a way, if you look at again the IT cycle of last 6 months, it was stark outperformer as expectations built up for how US economy can pick up in October to December time. IT was a stark outperformer. Once a little bit worry on US came stroke, the tariffs. So if I have to really, make a view on IT, I'll prefer to say, let's wait till 2nd April does, IT come into some gamut. I know it's not a product, so, tariff is difficult to be use the word there. But is there something else, which might come to possibly, is possibly a worry right now?
I just want to quickly point out that for the first time, I think in at least 4 or 5 days, and 4 or 5 days is how long this market has rallied non-stop, and in a very powerful way, market breadth has turned. This is, again, I mean, we've been trading for half an hour, not even half an hour, and market gains are there. I mean, 65 points in the Nifty, but look at the advanced decline ratio. So 1,400 stocks are lower and about 1,000 stocks are higher. It's nothing dramatic, but we've had a one-way move, as we've been pointing out, and now you're heading into that, as Krishna has also been pointing out, the 2nd of April. And who knows, if anything, there is only, Trump and his team have been creating chaos and confusion with statement after statement, sometimes meaning this, sometimes meaning that. So very little, there's no firm handle on the extent of it and what may actually happen. Once again, I think this came through clearly in one of the discussions. The impact on India is indirect through weaker global growth, weaker, if tariffs are higher. It's not directly with regards to tariffs imposed on India, even if India has come up in Trump's speeches, etc., multiple times over the last 2 months or so. Look at the market Nifty heat map as well, more evenly matched now, equal number of gainers and equal number of losers as well. Phenolex Cables is another one which is up about 3.5%. It was not there in the mix in the morning and we started, and it's the number one volume-led gainer. And look at two other names which were absent in the morning. HEG is up 13% now, so it's gone up like a rocket. Of course, along with it is graphite, which is up 10%. So HEG and graphite are both surging as we speak. Those are sort of new additions. As I said, still early, just 15 minutes into market open at this point in time. What we'll do is we'll take a quick commercial break here. Krishna, thank you very much for joining us here on the program. Appreciate your thoughts. We'll take a quick break, come back. And okay, I think what we'll do is we'll focus on our next management. Krishna, thank you very much. I think we have the management of NLC ready with us.
Nigel is taking this one.
All right, let's focus on the power play. Power demand is expected to peak this summer. Electricity consumption is already on the rise with strong demand in the last 2 months. So is India ready to beat the peak power demand? To discuss this and more, and also focus on business, we're joined by Mr. Prasanna Kumar Motupalli, the Chairman and Managing Director at NLC India. Hi, sir. Good morning. Always good to have you on the show. Tell us, what are the trends you're observing currently with regard to the demand supply? The problem is we are bracing for a bit of a power deficit. Is that the case? Could you tell us your quick word on it?
In the last financial year, in fact, it is in the current financial year, the 250 gigawatt of power requirement was met successfully. And coal and lignite production for supporting that was also good. So in the current next financial year, the power demand is going to increase by around 6 to 7%. That is the forecast. And with the type of production of coal and lignite the country is having, and the power stations stocks are also good, I don't see any problem in meeting the power requirement. In the last 10 years, we traveled from power scarce scenario to power sufficient scenario. So there is no problem in meeting the peak demand that is going to come.
Is it, the thing is, sir, good morning, Prashant here. Of course, I mean, you're well prepared, capacities, etc. But how well prepared is the industry in your opinion, sir? Because every summer, and I think this has been true for many years now, is hotter than the last one. So peak deficits keep rising, right? And into every summer, this becomes a big talking point. Through the summer, it becomes a big talking point. Our capacity is coming up fast enough, sir.
If there is a substantial capacity addition both in thermal as well as renewable power generation, and whatever growth in power requirement we are expecting, 6% to 7%, the capacity addition is more than that, and that is the reason why we can comfortably meet the power demand requirement going forward.
Sir, can you give us some targets on lignite mining? I mean, how are you likely to close FY25, and then what are your overall mining and production targets for as you start planning for the next year as well?
Madam, in the current financial year, we targeted 25 million metric tons. We will be achieving around 92% of that. That was mainly because lignite being a fitted thermal power station, and there were power surrenders because of the rains in the rainy season in the last financial year. This year, next financial year, we are targeting 26 million metric ton, and we are hopeful that we will be doing more than that. And in coal production, this time we achieved more than 16 million metric ton, which is the all-time highest ever coal production. And coal plus lignite also, this is the all-time highest ever coal plus lignite production in the history of NLC India Limited.
Okay. Just a quick update on, some of the capex that you've been undertaking. Ghatampur Unit 2 and 3, if you could tell us about that, and also the Talabira power plant. What are the commissioning timelines for all of these?
In the month of December, we declared COD of unit number 1 of Ghatampur, and we are targeting for COD of unit number 2 in the month of May, and unit number 3 by October. So by October end, the entire station commercial operation will be declared. And coming to Talavera, the contract was awarded to BHEL and works are in fast progress. The land acquisition activities are also in fast progress. So the timeline for Talavera 3 into 800 megawatt is 2030 and 2930 in fact. And Talavera stage 2, that 800 megawatt, that also we are going to tenderize. And the timeline for that is 3031.
All right, let's focus on the renewable part of your business, sir. Could you tell us what is the current capacity? How much of it comes on stream in FY26 and FY27? And since we're talking about renewable, where are you at with regard to the IPO? When do we see that hit the markets?
At present, we are having 1.4 gigawatt solar plus wind capacity. We were the first company to add 1 gigawatt capacity in the country. And subsequently, we are targeting to reach to 10 gigawatt level by 2030. While entire globe is targeting to triple their renewables, we are targeting to increase our renewable capacity 7 times. And efforts are already on for that. Around 2.5 gigawatt of renewable capacity work is in progress in the state of Rajasthan, in the state of Gujarat, and in the state of Tamil Nadu. And we are targeting to achieve more than 50% renewable capacity by 2030. And all works are in fast progress. And recently, we won 2 major tenders in renewables. One wind power tender by SJVN, that is 200 megawatt, and in the tender floated by NTPC Green, we won 450 megawatt, and it is about to be LOA is about to be issued, and we entered an agreement with Assam government for adding a capacity of 1 gigawatt in the state of Assam. And we also entered an agreement with Rajasthan and formed JV for establishing renewable capacity of 2000 gigawatt. With all these things in position, we are sure that we will be achieving the target of 10 gigawatt by 2030. Coming to the IPO, all the actions required for that are in fast progress. And we are expecting in the Q4 of next financial year or Q1 of the 26-27.
And sir, on this IPO, I mean, do you already have a rough sense of the total value of the assets that you will be having in that housing in that entity? I mean, the timelines you've said, Q4 of FY26. And what will be the scale and size of this entity and the total value that perhaps you'll be ascribing to the assets there?
Actually, that's we are still working on that. I think the exact figure we will let you know once we finally calculate that.
Okay.
All right. We'll leave it there, sir. Thank you very much, as always, for taking out the time and joining us here on CNBC-TV18. It's a pleasure. The markets turned right back up. So it gave a little bit of a wobble. And we are back up 130 points once again. 23,789, 23,790. And we are almost at the February highs now. So high is 23,807. We're at 23,785. So 15, 20 points away, the February highs for the Nifty. There you go, the brief dip. Market breadth is still 1:1. It is not 3:1 what we started with. But it looks like broadly the dip has been bought in, at least the first one this morning. Time for a quick commercial break here. We'll come back. We'll speak with the management of Titagarh Wagons on the other side. We'll ask them how execution is looking, both from the company's perspective and, of course, also awards, which were tenders, etc., which are being put out by the government. Stay tuned.
Welcome back. So green continues to be the color. Lots of individual stocks in focus. The next company on our radar is actually Titagarh Wagon. The company's got big capex plans, and the outlook for FY26 is just about coming in place. So let's get that conversation going. The company has given long-term EBITDA margin targets of about 13 to 15%. But what about a pickup in execution? Let's discuss this with Pritish Chaudhary, Deputy Managing Director at Titagarh Rail Systems. Mr. Chaudhary, thank you very much for joining in. So, let's actually start there. In Q4, has there been some sort of a pickup in execution? Because while you've had, of course, big plans on the capex side, on the order book side, what about the revenue accretion? I mean, how has it been in the fourth quarter as now you're coming up to end the year?
Sure. So the Q4 has been comparatively compared to a Q3 in terms of the wagon execution better. So as you may be aware, in Q3 there were some issues with the availability of wheel sets, which the entire industry faced, all the wagon manufacturers faced. In Q4, that situation has resolved to some extent, not fully, but it has resolved to some extent, and the production numbers have improved as compared to Q3. But we are still not at that level, that stable run rate level of 1,000 wagons per month, which we intend or which we expect that by Q1, the situation should be normalized.
So Q1, maybe you get back to full normalcy. Right now, it's only partially resolved, which means what? I mean, when you talk about your wagon segment, and let's kind of break this down. Let's talk about, of course, passenger wagons, and also give us an update on the freight segment as well. Will it be sort of a flat end to the year then?
So it would not be flat if you compare it on a year-on-year basis. Compared to the last quarter, the numbers would maybe be even a little higher as far as wagon production is concerned. But as I said, the wheel set issue that prevailed in Q3 did not get entirely resolved in Q4. So a little bit of an impact on account of that is still visible, which will get resolved by Q1. As far as the passenger division is concerned, the availability or the non-availability of wheel sets doesn't really make a difference there because that's not a constraint. On the passenger side, the Ahmedabad Metro and the Surat Metro, as well as the Vande Bharat, are actually in their design phase at the moment. And in the coming financial year, all of those three projects will actually go into execution.
Pritish, hi, good morning. Prashant here. Just to take a point, there was an article 2 days back about this wheel sets issue saying that we are going back to importing wheel sets from China. What's the basic issue? I mean, is it just sort of ramping up capacity here and we're kind of bridging the gap with these imports now? Or what is the gap really?
So the gap was that in the rail wheel factory in Bangalore, they were having some production constraints, the exact details of which are not known to me. But there were some production constraints because of which the levels at which they were aiming to produce at, those levels were not being met. And therefore, there has been a little order placed on China. But as far as the private wagon industry is concerned, the wheel sets were being imported from China, and they still are being imported from China, not just in the case of Titagarh, but in the case of all wagon manufacturers. This import we intend to stop only next year once the wheel factory that we're setting up in a JV with Ramkrishna Forgings, once that's active by Feb or March of 2026, we expect that the import of wheel sets from China, for whether it's for the private wagons or for whatever else, would stop.
All right. Well, hi, Pritesh. Good to have you on the show. Could you give us a couple of numbers, though, in terms of wagons? I think you were aiming for around 12,000, right? So by when do you get to that mark? And for the coming year, what kind of a number should we be looking at?
Sure. So as far as the capacity is concerned and the manpower availability and the entire infrastructure is concerned, we're already ready and geared to produce at 1,000 wagons per month. It's just a few external factors like the ones we've just been talking about, because of which we haven't been able to breach those levels consistently. As far as this year goes, since we're very close to the end of the year, I will refrain from giving any sort of numbers. But as far as the next year is concerned, we expect to be the standard run rate of 11 to 12,000 wagons.
All right. And you had guided that margins will perk up from here as well. 13 to 15% was the range you were talking about. We see that in FY26?
So the 13 to 15% range is actually on account of the PRS that will be achieved in a few years from now. For the FRS business, for the freight wagon business, an EBITDA level of between 12 to 13% is what we've been guiding, and that is what we'll achieve.
All right. Pritesh, in terms of, so for now, I'm assuming in terms of fresh tenders, etc., being put together by the railways, I mean, should we see anything? What should we expect this year, this calendar year?
So, in fact, just this morning, there were some news articles which said that in the next financial, actually, the railway capex is likely to increase by almost 15 to 20%. Now, again, these are media reports, so the veracity of those is yet to be confirmed. But the plans of the railways are very, very clear, the long-term plans of the railways. And in an industry like ours, in a business like ours, we do not expect that every month they'll be ordering or every quarter they'll be ordering. As of now, as far as Titagarh is concerned, our order backlog does see us through the entire next financial year as far as wagons is concerned. As far as Vande Bharat is concerned, it's for the next few financial years, actually. So we expect that before the current orders actually come to a close or start coming to a close, there will be further tenders floated from the railways. On the metro side, however, the story is a little different. On the metro side, since that does not directly fall under the Ministry of Railways, there are new tenders, new lines being announced, new projects being announced almost on a weekly or a fortnightly basis. So the metro market is really booming.
Absolutely. I was just coming to that, Pritesh, because if I look at the Q3 numbers, then the dispatch of metro coaches, and I understand these are lumpy businesses. I mean, this is not like, steady billing. It's not an IT services business. But I think it was only 3, the dispatch over there. So an overall passenger rail revenue, if I talk about the passenger rail business, and that had come down quite a bit. It had kind of halved in the third quarter. So if we talk about projections for the new year now, from the metro business, what is going to be the pickup in the business? Your sense of, and we're talking only execution and therefore revenue growth from the metro business and also from the passenger rail segment.
Sure. So we kind of expected the Q3 and the Q4 to be muted on the passenger front because the Pune Metro, which was the only project under execution, is now almost finished. And the Ahmedabad Metro, the Surat Metro, and the Vande Bharat all are in their design phase, which, as I mentioned at the beginning of my conversation, will start execution in the coming financial year. The Bangalore Metro as well, which we're doing in collaboration with CRRC, that the series execution or the series production starts picking up from Q1 of the coming financial as well. So the long story short is that in FY25-26, all the passenger projects that we have that have been in their design phase or in various phases leading up to the execution will actually start execution.
First half or second half, Pritesh? this is going to be more back-ended, second half FY26, or will Q1, Q2 also start showing up, more traction?
So some projects, it will be across the year, ma'am. So Vande Bharat, for example, will be in March of 26. So absolute end of the next financial. Ahmedabad will be around the end of Q1 or beginning of Q2. Surat will be shortly thereafter. Bangalore actually starts from the beginning of Q1 itself. So it's all spread out a little bit, actually.
Okay, all right. Thank you very much, Pritesh, and good speaking with you. That's Titagarh Rail with perspective on their business and, of course, a bit about the industry as well. That wheelsets issue, perhaps still a factor for now for them and other players as well, like Texmaco, etc. as well. But otherwise remain very, very positive. Let's talk about now demand as far as the consumer durables space is concerned. Summer demand is sort of course, starting to pick up. In certain categories, we've sort of got that feedback from companies like Blue Star, etc., that we have spoken with. We have Premchand Devarakonda, Chief Financial Officer at Electronics Smart India, and Biju Kurian, Chairman of Retailers Association of India, to give us a sense of how things are looking. Gentlemen, good morning. Good to have both of you here. Prashant here. Mr. Premchand, if I can start with you, sir. Could you give us a sense of how this quarter, Jan to March, is panning out like? I mean, you typically evaluate your business on a Jan to June basis to cut out seasonality. We are, of course, not there yet. We're just at the beginning rather than at the end. But how are things shaping up for you on the consumer durable side?
Good morning. First of all, thank you very much for having me on your show. See, after witnessing a little bit of disappointing third quarter, so this fourth quarter is quite promising, and we did see decent demand for the consumer durables in the fourth quarter of this year. And I think the trend is going to continue further till
I think we'll okay, I think Mr. Premchand, can you hear me, sir?
Yeah, now I can hear you. Yeah.
Okay, there was a bit of a scratchy line there. So could you put that in numbers, Mr. Premchand? 9-month same-store sales growth was about 3.8%. You said Q4 is looking very promising. Could you give us what Q4 may look like? I mean, you don't have to give a precise number since the quarter is still on. But 5% plus, what exactly are we looking at? And also, if you can provide us with some targets for same-store sales growth for next year, FY26, sir.
See, SSG, because about more than 65% of our top line is contributed from Hyderabad. So since the base is very high, expecting like a double-digit SSG from Hyderabad region is little. It's over-optimistic, but we are expecting mid-single-digit SSG coming from Hyderabad cluster, and in other clusters like Telangana and then Andhra Pradesh and North cluster, there we could see a double-digit SSG coming in from these three clusters.
This is for Q4.
Yeah.
So on a blended basis, on an overall basis, what are we looking at? If you can give us a sense.
See, overall for the Q3, it will be on between 5 and 6%.
You mean Jan to March?
Yes, I'm talking about Jan to March.
Okay, and beyond that, I mean, is too early or you have some visibility? Will you be able to improve?
See, for the next year, at the company level, we are expecting mid-single-digit SSG because last year base was very high. That's the reason why it is going to be like mid-single-digit for the next year also.
All right, Mr. Premchand, got that. Stay with us. Let's get in Mr. Biju Kurian as well into the conversation. Hi, Biju. Good morning, and thanks a lot for joining in. What are the demand trends that you have seen so far in Q4 ahead of the summer season? And also, if you could give us your sense, which are the key categories that are doing well and expected to do well?
Well, I think overall, when I take into account all the categories, what we have seen is a very subdued growth in Q4. Now, whether this is because of absolute consumption, whether this is because of the consumer sentiment, and typically the stock market has a very critical role to play in terms of consumer sentiment. All of these have truly affected the way the business has actually uh, turned out in this quarter so far. Some categories, obviously, like food and grocery, has remained steady, mid single digits in terms of growth. The apparel industry is close to zero in terms of growth. The electronics industry, again, which is largely led by the introduction of new products, as well as the introduction of new occasions. So typically things like a World Cup football, IPL tends to drive some upgradation in terms of purchases, or new mobile phone launches also tend to do that. There hasn't been too much happening in this quarter so far. And I think that has kind of tempered the growth. So as far as the overall retail industry is concerned, we are seeing a relatively stable market, not much of a growth like we had seen earlier. So I think that's the larger RAI view on this.
Okay, so you spoke about two industries, electronics and apparel. Would you be able, in a position, Mr. Korean, to talk about consumer durables? I mean, large appliances, etc.
Yeah, electronics also, includes consumer durables. And what we must see, yeah. So when we talk about it, and if you were to look at it segment by segment, the large three categories are televisions, mobile phones, and appliances. Now, televisions largely driven, as I mentioned earlier, by sporting occasions. Mobile phones largely driven by the introduction of new models, which are, really killer models. And then in terms of appliances, it's mostly through penetration and upgradation in households. The penetration and upgradation in households continues to happen. However, appliances as a part of the consumer durables market is a smaller part, while televisions and mobile phones tend to be much larger in terms of contributors. So while appliances have done relatively better, televisions and mobile phones have been slightly weaker in terms of growth, which is the reason why the category as a whole tends to be at maybe between 5 to 8% in terms of like-for-like growth.
Okay, got it. So some slowdown trends quite evident. And you're looking at mid-single same-store sales growth. This mid-single-digit growth has become quite synonymous with most things consumer. Mr. Korean, if you could just expand on that point, this gradual slowdown in demand that we're seeing, how much is it a function of maybe tighter financing, lesser availability of just funds with households? And do you have reasons to believe that now with the RBI also easing, and obviously now we've got the income tax bonanza as well, do you have reasons to believe that FY26 could be substantially better?
Certainly, there's a lot of hope about the future. But more importantly, I think when we talked about household finance, the RBI has actually come down quite heavily on personal loans. A lot of personal loans were used to drive appliances purchase as well as some durables purchase. So that to some extent has affected, because there is both secured and unsecured. So the EMI model continues to work well, whereas the non-EMI model is where there is a bit of a challenge. In terms of general consumer sentiment has been a bit damp. Two reasons. One is that even though you might not be heavily invested in the stock market, but a decline in the stock market tends to bring down the mood of consumers. That's one part of it. And the second part of it is that we've also been hearing some early signs of layoffs in the IT industry, etc. And that is another reason why there is a little bit of concern about job security. So when the future doesn't augur well, then what tends to happen is that the consumers tend to be a bit more conservative in terms of spending, not so willing to be able to open their wallets. So I think that's one part about it. As we go along, and if you were to look at the kind of savings that have happened, and that savings have happened largely in the lower tax brackets, which is up to 10 to 12 lakhs. But if you really look at, where a lot of India's income is, a lot of India's income is actually in the greater than 10 to 12 lakhs. So you do have a part of the middle class which gets covered by the tax savings, but a lot beyond the middle class who are actually drivers of categories like consumer durables still really don't have any tax savings. But for them, really, these tax incentives were not the big driver of purchase. So, the lower middle class, you might see a little bit of impact in terms of consumer appliances penetration levels and purchases. So that's our view. 26 FY26 is expected to be better. A lot will depend on how the rural markets perform. A lot will depend on what happens in urban. So I think we're all looking forward with a lot of anticipation to FY26.
I mean, we can hope, right? That's certainly the case. 1st of April, by the way, those 1 lakh crores worth of tax breaks start to kick in. I mean, it'll show a few months to start to take shape. And maybe on the 9th of April, RBI will cut rates, and that'll be the beginning of a few rate cuts as well. So there are, at the margin, maybe things which are lined up. Mr. Premchand, if you can hear me, sir, you are, as you said, Hyderabad, Telangana, Andhra. I mean, these are all, that's one spot where, which is still, and Mr. Kurian mentioned about some IT layoffs, etc. The one industry which is doing extremely well is global capability centers, GCCs. And every day you hear about some GCC or the other setting up base or wanting to set up base, signing up with the government in that zone, in the markets that you operate in, and on which you're very heavily reliant. Does the underlying sort of consumer remain strong in those markets that you operate in, or is there any weakness there as well? Mr. Premchand. Mr. Premchand, can you hear me, sir? Okay, I think we don't have him. So a bit of a tricky, patchy line. I think we'll wrap up this discussion. Mr. Kurian, thank you very much for the insights. Both of you, by the way, spoke about stock market decline. The market's coming up. So maybe at the margin, that is also a factor which perhaps will work. And we'll see. Thank you for that. Thank you for those insights, and appreciate your time here on CNBC-TV18. I think we'll just look at the market, which is up 200 points now. So this is now, I think we need to put bigger targets. I think that's the only way. At 190 points now, 23,847. The February high is come and gone. And this is turning out to be another, super day. Mitesh is back with us. Mitesh, it's a surge. Once again, what would you do?
That's right, Prashant. And in fact, I was looking at the weekly charts on the indices because now the weekly indicators have started turning up. It started with the hourly indicators last week, then the daily indicators, and now the weekly indicators are turning up. Very likely that, we will look at extension of the upside targets in the Nifty to about 24,750, 800 zone. So we now have more space to go up further. But let's not forget the kind of rally which we have had. So again, the idea is that use declines to buy into. Today we got an intraday dip. I would have hoped for more. My best entry point on the Nifty would be around 23,600. In case we get it, if not today, maybe in a day or two. But yeah, I think we're heading much higher, and we'll make the sequence of higher highs and higher lows on the hourly to hourly charts. So trade with long bias. Today, I think, some kind of reversal, Prashant, is also seen in the Nifty IT index. So if you look at the IT names, you will find good traction being built up over there. So I have a buy on HCL Tech. It's come on the radar after a long time, but HCL Tech is a buy with a stop below levels of 1630 for targets of 1695. And the other one which I like is Info Edge on Naukri, which I would recommend buying with yesterday's high as the stop loss, which was around 7160, so about a 150 point lower, and a target of 7650 on the upside.
All right. Thank you for those trades, Mitesh, and appreciate it. We'll take a quick commercial break here. On the other side, Manisha will focus on commodities, what's top of her mind, coming up in just a bit.
Welcome back. Markets holding strong, and as we pointed out earlier today, the sector to watch is going to be the tech pack. That's the one that's making the big bazooka move today, up close to around 2% or thereabouts. The tech pack comes up for you on the screen. For the time being, let's turn our attention a little bit away from the equity markets and focus on the commodity space. Manisha Gupta is standing by to tell us exactly that. Manisha, take it away.
Thank you for that, Nigel. I'm looking at metals prices because we're looking at very strong gains continuing into this one, and the outperformance clearly coming in from copper, which is very close to its all-time highs. Actually, when you look at the COMEX prices, we're just about 2 cents away from its all-time high of $5.2 per barrel per pound there. So very strong gains continuing into this one. And interestingly, even as on LME, we've seen prices gain up by 13%, but in the COMEX, you have seen prices gain up by 28%. That's the kind of disparity that we have seen on prices, and is the reason you're looking at US copper premium at LME standing at $1,500 a ton there. Well, various supportive factors there. To begin with, it has been about potential US tariffs of 25% perhaps coming in copper, and that has led to a lot of copper being shifted from various other geographies into US. Apart from that, it also is about new stimulus measures coming in from China and more anticipated. And then the markets also are looking at deficit concerns. Almost everybody, all brokings and banks have talked about big deficit in this year and the next as well. The latest report comes in from JP Morgan, which is talking about a big deficit of around 3 million tons every year by 2030. JP Morgan also talks about all-time high prices in this year, and their forecast for copper for this year is $11,500 a ton. Not too far behind is zinc, which, by the way, is an underperformer in this year in the metal space until now, but it also has seen good gains in this week. It's trading at a 3-month highs, and we also are looking at reports coming in from Nyrstar Australia announcing a 25% output cut for the year, and then Alaska Red Dog Mine, which is 10% of where global zinc comes in from, also is looking to scale back because of ore depletion for 2025. The markets also are looking at unprofitable TCs, and that has led to lower production from China, down by nearly 7% in sense of refined zinc production for the year 2024. When you look at 2024 reports as well, it also will tell you that the global zinc output fell for a third straight year in 2024. If the demand starts to come back, then you are looking at zinc prices going higher. Also, when you look at the LME as inventories, LME zinc, high zinc grade inventories have declined by 74,000 tons in this year and stand at 160,000 tons. So everywhere that you look, you are looking at strength continuing in case of prices. One last table should show you on what we've done as this quarter ends in sense of many of these metal prices. These are LME prices, but let me tell you, copper is up 13% on LME. It is 28% higher in the US markets right now. Aluminum, 2.5% higher on LME. It's up 15% in the COMEX markets right now. So that disparity is quite huge as we look at LME and the US markets. Nickel is gained up by 5%. And remember, 25% of those tariffs have come in on aluminum and cobalt as well. So cobalt, which was an underperformer last year, is up 38% in this year. Zinc continues to be an underperformer, and we've seen tin prices gain up by 18% because of inventory declines and production concerns as well. So overall, metal pack slightly taken down by zinc, but otherwise doing quite well.
All right, thanks a lot for that, Manisha. From metals, let's focus on cement. And UBS has gone ahead and upgraded the cement sector. They believe that the rough patch is coming to an end, and so they've upgraded Ultratech Cement, Ambuja, as well as Dalmia to buy. Remember, UBS had a negative view on the sector since July 2023. Due to rising competition, demand slowdown due to general election last year, and also rising price competition after Adani's entry. But now, UBS has done a bit of a U-turn. They've gone ahead, they've turned positive. They anticipate earnings upcycle to emerge from this fiscal onwards. And for the next couple of years, they are focusing on solid EBITDA growth. Their positive stance is backed by demand revival driven by housing upcycle and revival in government capex. The structural cost savings measures, that's what's going to help margins for all these companies. And they're citing bottoming out of prices after the sharp fall we've seen in the 9 months of FY25. Sector consolidation as well has been led by the top two companies, that's Ultratech as well as Ambuja. This chart should come up for you on the screen, and they've given reasons for upgrading the various stocks. Ultratech has shown execution in tough times, both on the growth as well as on margins. Their top pick, though, is Ambuja, because of the higher growth as well as lower valuation. And on Dalmia, they've done a U-turn. They've upgraded the stock from sell to buy, while on ACC, as is they were positive, they believe that the valuations are supportive and there is an industry tailwind as well. Put all this together, cement stocks are doing quite well in today's trade. Well, time to slip into a short break. On the other side, we'll focus on a special segment. It's the economy. Lata speaks to the head of Credit Bureau, CRIF, on whether MFI loans and unsecured loans are showing less or more defaults. Stay tuned for that conversation.
Welcome to It's the Economy. Today we are looking at the asset quality of banks, the amount of defaults. We are looking at NBFCs, MFIs, all categories of lenders. Now, two sets of loans have been showing a worrying trend, a worrying rise in defaults in 2024. The microfinance, MFI loans and unsecured personal loans, credit card loans, uncollateralized loans. Is there any improvement as we enter into 2025? Now almost one quarter is over. To answer this, I have with me perhaps the person best suited to it, the Managing Director of a fast-growing credit bureau, CRIF Highmark, Sachin Seth, Chairman at CRIF Highmark and Regional Managing Director at CRIF India and South Asia joins us. Thank you very much, Sachin, for joining us. Well, first up, let me get straight away to the microfinance. That is the category that is worrying people a lot. So how does, I believe you have January data. Is it looking any better or much worse than, 2024?
Thank you, Lata, for having me. And, really pleasure to be here. I do agree that, microfinance has given a lot of sleepless nights to people this year. I was on the show in January with you. And yes. From then on, there has been, I must say that while a lot of action has been taken by everyone in the ecosystem, but still, I think there is seems to be a certain decline continues. So if I give you the data, if I talk about portfolio at risk from 91 to 180, which is considered to be the very important parameter to look at the portfolio, the health. So March 2024, it was at 0.9%. September 24 data, what we discussed in January, that was about 3.2%. As of today, is 3.6%. So I would say the rate of decline of the portfolio definitely has reduced significantly. because between March and September, it declined, very, very drastically. But from September to January, which is the latest data which you have as of today, nobody has in the industry, which we've culled out for you, that is about 3.6%. So it is reducing, the decline is reducing, but yes, it has continued from September till the data of end of January at this moment. And the
declining. 1 minute. What is declining? Total amount of lending is declining. But what about defaults?
Yeah. So basically, the default percentage has gone up. When I say the loan portfolio at risk, when I say 3.6% is basically portfolio, so that's increased. But the book size has declined. Yeah. So book size obviously was in March was 4.42 lakh crore, and it has come down to 3.86 lakhs crore, which is almost a 13% decline of the book. Yeah, so you are correct. I mean, the book has declined, and the portfolio at risk has gone up from 0.9% to 3.6%. So that's understandable.
Okay. Are people able to show any better collections? I mean, that's the data that MFIs normally release, net collections. So collections are going down, you're saying? And is it going down for all categories? 30-day default, 60-day, 90-day, all of them are collections going down?
So there is I must say, silver lining here. Till December, we were seeing that collections were, improvements were not happening as people had expected. But from January, the trend is showing that there is an improvement between, let's say, up to 30 days. There is a 5% improvement in the forward flow rates basis, net forward flow rate, NFF rates, what we call it, right? Okay. So there's a 5% improvement there. In 31 to 60 days, it's about 11%, and 61 to 90 also is about 11%. So there's a silver lining here. So definitely there is collection rates, which is basically moving from one bucket to another and offsetted by the collection from next bucket to previous one. That's we call NFF rates. There is a 5%, 11% and 11% improvements. So that's what I can tell you, that may be the sign of things to come. But as of today, it's just an indicator. Yeah.
So, most of the MFI, we had Sanjay Agarwal of AU Small Finance. Before that, we have had many MFI people. Their point is that Q4 will look bad and it will start showing improvement in April, May, June. Would that be your view? I mean, it's a forward-looking statement.
I would say, given the indications I just shared with you, first of all, a couple of things on this. First of all, the SROs have put guardrails. I've been meeting a lot of CEOs of MFI organizations for the last couple of months, and I think everybody has been very cautious. They have been very, very cautious about the way they underwrite loans. So all that is showing results, I must say. And I think probably, it's a matter of, I really can't forecast that whether it's a 1 quarter or 2 quarter or whatever. But yes, definitely, I think the results have started showing. Now, how much time it will take to really solve the problem, we'll have to see. Okay. But yes, we are in the right direction.
Okay. All right. Now, let me come to the more important unsecured loans. Can you tell us whether an unsecured loan, so I think unsecured would be what? Credit card loans. Is there any higher default rate?
Yeah, so unsecured is covered in, you have credit card loans, you have personal loans, consumer durable loans, and some of the business loans, etc. So there, I must say that at this moment, credit card definitely remains under stress. And credit card, if you talk about 91 to 180 days DPD, it was January 2024. If you compare with January 2025, it was 6.94%. Was in January 2024. And today it is actually 7.9%. So definitely, and under 50,000 kind of limit cards are really under a bit of a stress, more than anything else. But if you ask me, personal loans, which the growth rate was very high, but because of regulator being vigilant about ensuring that we don't create a sort of a bad book there, and also there were a lot of stringent norms were put which were in the favor of basically making a stable environment. I think personal loans remain stable, so we have delinquencies 1.1%, and they remain 1.1% today. In last 1 year, they have not increased. Only the growth of PL book has reduced from 40% a year to maybe 11% now. And business loans also about 1% was last year and remained 1.6% last year. It remains 1.6% now as well. So it's stable. So other than credit card, if you ask me, unsecured loan book remains more or less stable because of the actions taken by various ecosystem players and regulator. But credit card definitely is about 1% more than what it was here in terms of stress.
Yeah, I get that your table is very clear, but I couldn't put that entire table. But credit card loans, clearly defaults going up or still high. What about even secured loans? You know, there was a stray, I can't remember who said it, that even two-wheeler loans, there have been rising defaults. Now, technically, these are secured, but what is the experience in these kinds of loans, two-wheeler, commercial vehicle?
Yeah, two-wheeler loans in between. I mean, so if you talk about data from January 2024 to January 2025, I mean, it has been very minor changes. While on a face of it, it did look like there was a sentiment that, it would go up. So it was 1.7% January 2024. It was around June 1.6. December, it was 1.8. So there was a bit of a stress, which was people were feeling that it would cause. But January data is showing very good signs, and we are about 1.7. So we are back to the normal, so January 24 and 25 is exactly the same. So I must say that, we are doing good. And I think I don't see any need of concern. But obviously, we need to be vigilant because it is hypothecated loan, but it is as good as the consumer durable in terms of size or a PL in terms of the loan ticket size, etc.
Okay. Well, time permitting, I'll come back to this personal retail loans. Let me quickly go through MSME loans or what you call business loans. Is there any improvement in terms of amount of loans given as well quality of loans? What are the trends?
Yeah. So I think MSME loans, obviously there is, in terms of loans, there has been uptake in MSME loans there. But I would say right now, people are, cautious in giving MSME loans as well because of the current trend, which is in the market in terms of now the MSME, definitions are also changing, and people are looking at micro segments also. And micro segments a little bit more riskier, and people are looking at new economies of which are coming, typically the e-commerce loans, etc. But if you ask me, typically people who are in MSME loans, commercial vehicle loans, etc., more or less it is same. And it was like at 1%, 91 to 180 days delinquency in January 24. It is 1.5% today. So MSMEs which are dependent on wheels kind of loans are basically more or less same.
Okay. Now, you do have a category of secured business loans where the portfolio at risk seems to have gone down. So maybe that's something positive. Sachin, finally, instead of me throwing categories at you, you tell me as key takeaways. Where are the areas of worry in terms of retail loans? Where are the areas you won't worry?
Okay, so Lata, I must say that right now, offtake of loans around housing, around gold loan, around loan against properties, and basically, and business loans have been pretty good. And I think these loans are doing well. Obviously, I must also say with the caution that, many of the personal loans which were coming to personal loan and now personal loan are being given with much more stringent norms. A lot of people are going and putting gold and taking the personal loan against that for the uses which were again PL. So I would say we have to be a little bit cautious on that. But yeah, if you ask me from lender's perspective, it is highly secured. Risk is very low. So anything which is, housing, loan against property, business loan, and the gold loan. I think these are the loans from lender's perspective considered to be the low risk, and they are on the high end.
Okay. All right. We'll leave it at that. Thank you very much for a great 360-degree perspective on retail loans and MFI loans. Thank you very much, Sachin, for joining us. We really appreciate it. I think the areas of worry, as Sachin points out, is still credit card loans and MFI, a little bit of improvement, but perhaps we have a bit of distance to go. Secured loans, on the other hand, including two-wheeler loans, are not a spot of bother. And of course, secured loans like gold and LAP, are doing very well. With that, we wrap up on Bazaar. Chartbusters coming up.